All right, welcome back to the deep dive. Today we are focusing on one of the most volatile and I think fascinating stocks of 2025, Bloom Energy.
It really is. We're talking about absolutely massive price swings.
And it's all driven by this one single narrative,
Mm.
the AI revolution.
Exactly. And our mission today is to, cut through some of that noise. We need to unpack the incredible surge we saw, which was driven by very real demand.
And the sharp corrections that came right after.
Right. And most importantly, we need to talk about this brand new institutional validation that suggests some of the biggest money out there is starting to view this company, well, fundamentally differently.
Okay, so let's start there. Let's unpack that core connection. Why is Bloom Energy suddenly an AI stock?
Well, the problem is simple. AI data centers need a staggering amount of power. I mean, just an unbelievable amount.
And the legacy grid just can't keep up.
It can't. And that's where Bloom got completely re-rated. Its technology, the SOFC systems, solid oxide fuel cells, they offer a real solution.
These aren't just backup generators, right?
Not at all. They're like modular on-site power plants. They provide clean 247 power, and they're completely independent of all the grid bottlenecks.
And the key advantage, the thing that really matters for these AI companies, is the speed.
That's it. You can deploy them in, about 90 days? It's immediate relief. And that capability is what really launched the whole rally.
Then the big names started to validate it.
Right. First, you saw Oracle pick Bloom to power parts of its OCI, its cloud infrastructure for AI. That was a big credibility boost.
But the really big one, the one that just blew the doors off the stock.
That was the Brookfield asset management deal.
A huge deal. Brookfield named them a preferred provider for up to $5 billion in projects.
And the stock just it surged. What was it, a 25 or 30% jump in a single day? It was a signal that this wasn't just tech hype. This was a giant infrastructure player making a bet.
And the numbers that followed actually backed it up.
They did. The momentum was real. Q3 earnings came in and, they confirmed the story. Revenue hit $519 million.
Which was, what, a 57% year-over-year growth?
Yeah, exactly. So the growth was there.
So here's where the story takes, I think, a really fascinating turn. We move past the initial hype and into something more solid. A huge institutional endorsement.
This is the part that raises the big question. What happens when that long-term, stable money meets this kind of growth potential?
You're talking about CalPERS.
I am. We saw CalPERS, the largest public pension fund in the entire U.S., buy over 361,000 shares of Bloom in the third quarter.
Okay, that's significant on its own. But
Yeah.
that's not the whole story.
No. The really surprising part is that during that same period, CalPERS was actively selling part of its massive position in Microsoft.
Wow, so they're rotating out of, the definition of a stable tech giant.
And into an alternative power provider.
So what does that signal?
Oh, it's massive. It signals that a fund like CalPERS, which prioritizes stability, sees Bloom transitioning. It's not just a speculative growth stock anymore.
They see it as what?
They see it as a core infrastructure investment. That's a powerful long-term endorsement of the entire AI power thesis.
Okay, so if the story is that strong, and you have this huge institutional validation,
Yeah.
why the intense volatility? Why the sharp pullbacks?
Well, the short-term pressure came from a few places. First, you just had analysts like Jefferies come out with downgrades.
Citing valuation, right? The stock had run up so far, so fast.
Exactly, it was stretched.
Right.
And second, there was some market confusion. That Brookfield deal, it's a long-term deployment framework.
Not an immediate $5 billion purchase order.
Correct. So when expectations normalized a bit, you saw some profit taking.
And of course, you can't forget the broader market. Rising interest rates were hitting all high beta stocks.
Absolutely. And Bloom is the definition of a high beta name. It got hit hard in that rotation.
So you put this all together, what's the bigger picture here?
I think the big picture is that the long-term AI infrastructure story remains very much intact, but you have to accept the short-term noise.
And the volatility. These are not small swings.
Not at all. A 15 to 30% pullback in a stock like this should be considered normal. The bullish targets, they're tied to more partnerships, maybe the hydrogen tech kicking in. That puts you around $130, $160.
And the bearish case.
The bears are all about execution risk and valuation. They see it more in the $70 to $80 range if things don't go perfectly.
So the key takeaway here is that the daily price swings are just noise. It's the core narrative, seeing Bloom as essential AI power infrastructure, that really matters for the long term.
I think that's exactly right.
Which leaves us with a final provocative thought for you. Considering this major market rotation, What does it suggest when a massive conservative fund like CalPERS sells Microsoft to buy Bloom Energy? How should you think about the value of traditional tech versus the critical infrastructure needed to power it all moving forward?